Hi guys, welcome to my channel. A lot has happened this week. Twitter is no more. Federal Reserve raised interest rate. Jerome Powell raised interest rate this week. Report on U.S. job market just came out. So we're just gonna get right into it. But before we get into it, how many of you guys knew that companies that we know today, right now, big box name companies were actually rebranded and they were actually called something else? Like, for example, Subway. Subway was called Pete's Super Submarines. Pepsi Cola was called Brad's Drink. And Yahoo was called Jerry's Guide to the World Wide Web. I would say the changes to the names that we know today are much better names than they were originally. All right, boom. So let's get right into it. The last time interest rates were this high, President George W. Bush has just taken office and the MP3 player was king. Jerome Powell announced another quarter point hike to try to temper inflation, bringing interest rates into the 5.25 to the 5.50% range for the first time since January of '01. This is the 11th rate increase since March of 2022, when interest rates were raised from nearly zero. And the Fed might not be done, Powell said. One more rate hike is still on the table for later this year. So a few things the Fed are going to want to see before they can back off from another rate hike, okay? Jerome Powell do not want inflation to get out of hand. The last thing he wants to do is to cut rates now as inflation is coming down, only to see it come right back up again, and then we have to get even more aggressive by raising interest rates. So last month, the consumer price index showed inflation fell to 3%, all right, which is above the Fed's 2% target, but an improvement from last June. Remember, a year ago, inflation were at 9.1%. All right, so we are coming down and we are seeing inflation is shrinking. However, even though I think that 3%, I still believe that we are actually in a recession currently. That 3% CPI, remember, 40% of that is rent and housing. All right, rent and housing account for 40% of core inflation. So if you remove that, we're actually officially would be in a recession. Okay, if the Fed just changed the metrics on how they measure CPI. Jerome Powell currently is not happy where inflation is at the moment. Powell said that for inflation to be truly conquered, the job market, which currently boasts a low unemployment rate of 3.6%, will need to slow its roll. If consumer pricing don't stay durably down over the next couple of months, Jerome Powell said it's certainly possible for a 12th rate hike could be the charm, as everyone holds their breath and waits to see whether the Fed can really tackle inflation without bringing on a recession. Again, like I said before, Jerome Powell already said that he doesn't mind as long as he conquers inflation. His mandate is to crush and destroy inflation, even if he is willing to cause a recession. He wants to see unemployment rates go up and basically people stop spending money and companies to start laying off massive people. And also for the CPI to go back down from 3% to 2%. However, yesterday's report came in. The U.S. economy is humming. All right, U.S. gross domestic product, the U.S. GDP increased at more than expected, a 2.4% annualized rate last quarter, thanks to healthy consumer spending and businesses shelling out on investments. The latest figures show that not only is the U.S. economy not spiraling into a recession due to interest rate hikes, it's actually getting stronger as the year goes on. And for the cherry on top, underlying inflation rose at its slowest pace in 2 years. This could be a sign that the soft landing Jerome Powell wanted is probably coming to fruition. This is very strange. We've never been here before. The Fed keep raising rates. This is the 11th time. And with this report just coming out that the U.S. economy is still strong, that means if there's a strong economy, that means people are going to continue to spend. Consumer spending is going to continue to stay robust and strong. And the Fed is going to look at that, which might, more than likely, they will raise rates one more time before the year ends when they meet in September. Now, switching over to the markets. You have to flip your days since the Dow fell, counter back to zero. After a historic 13-day winning streak, the Dow, along with the other two major indexes, closed lower as its dizzying rise finally succumbed to gravity. There were some strong individual performances, however. Meta kept its impressive 2023 rolling after giving an optimistic earnings report on Wednesday. Big tech stocks have been surging this year as investors scramble to get in on the ground floor of what could be the next technological revolution, generative AI. On Thursday, it was time to face the music. Two AI heavyweights, Microsoft and Google, parent company Alphabet, dropped their first earnings report since sinking tens of billions of dollars into AI projects. The first test of whether their investments in the technology measure up to the hype. Alphabet, which declared code red. So basically, about a year ago, Alphabet was really nervous, all right, because when ChatGPT came out, it really posed a real problem for Google, what they do. So Google is a search engine. They were worried and they were nervous that more people was going to make ChatGPT their main search hub. And so that basically sent panic into Google, and they scrambled to also release their own AI technology as well. All right, so Google search advertising sales grew better than expected. So ChatGPT did not put a dent at all in Google's profits. $42.6 billion, showing that most people haven't made ChatGPT their default search engine. Microsoft beat expectation on its top and bottom lines and told investors that it had spent and would continue spending a shitload of money to build out AI infrastructure. So AI is coming whether we like it or not. There are many concerns out there for AI. For example, Elon Musk has been very vocal about this. And what people are worried about is that, say for example, AI, let's say your insurance company can deny you insurance because they use AI, and maybe they caught you on a person wherever you're driving on your phone, and the insurance company and the AI and the algorithm can pick that up and say, well, we don't want to insure you because you're a risky driver because the camera has picked you up, or facial recognition technology and so on and so forth, that you are you talk on the phone while you're driving, and that's the reason for them to deny you insurance. So there are legitimate concerns about AI, all right, but I guess this thing has to play out. I think there are possibly more good than bad, but the consequences of some of the stuff that AI can do can be really detrimental to society. For example, the deep fakes. Maybe they can show your politician or your president making an announcement, and it would sound like him or her. It would sound like the president. We would not be able to tell the difference. They would have the same cadences and so on and so forth. So it can be really, really dangerous, and it can have a negative impact on society with fake news and so on and so forth. So I do understand the concerns that a lot of big tech people have. Let's say, for example, Elon Musk about AI and its impact on society. So I can see where that can really be a problem. All right. And speaking of tech, so in billionaire news, Zuck's year of efficiency is paying off. The parade of big tech company earnings continued, with Meta and the company raked in $32 billion for its most profitable quarter since 2021. And sales were up thanks in part to better and targeting through AI technology. And Facebook now has 3 billion monthly users, but the company's big bet on the metaverse is still looking questionable. Its Reality Labs division, which makes that tech, has lost more than $21 billion since last year. And more billionaire news. So Joe Louis, not the boxer, not that guy, pleaded not guilty to insider trading yesterday. The British billionaire who owns the Tottenham Hotspur Football Club allegedly tipped off people close to him, including his two private pilots. Prosecutors claim that Lewis has been telling his friends, girlfriends, and even some of his personal assistants he had on his $250 million super yacht confidential information about public companies for at least 8 years. Lewis had access to a smorgasbord of non-public information because as the founder of the Tavistock Group investment firm, he and his employees sat on several corporate boards. Honestly, I think they all do this kind of shit, man. I think they have, these billionaires, people who have exclusive access and information. They pass that, information to their girlfriends, to their friends, to their family, and people they know. I don't know if this guy, maybe he pissed someone off and now they're going after him, but I think they all do that kind of stuff. All right, now for quick news. OpenAI, Microsoft, Google, and Anthropic have joined forces to start the Frontier Model Forum, an industry group to promote keeping government out of safe and responsible AI development. The European Central Bank took its cues from the Fed and raised interest rates to a 23-year high. Investors think it could be the ECB's last rate hike this cycle. Bud Light parent company Anheuser-Busch said that it will lay off 350 employees amid a rough stretch for the brand. That is the information that I currently have for you guys. Thank you for checking out my channel. Do you like this format of news, the way I bring it to you guys? Leave a comment, leave a like, subscribe to my channel, and thank you for coming. I'll see you soon.